We had consolidation that took place on both sides of the self-storage industry, and it happened within 8 days of each other. Now, at first glance to an individual operator, a lot of this stuff may seem scary, but there is another side. Data is becoming transferred, more readily available. It's becoming acquired and packaged up and sold, and it's being brought down to independent users. Those that aren't playing in that world, it will become very obvious, and they will have an uncompetitive advantage in the marketplace. Data, information has become the name of the game. The self-storage industry is consolidating again, and in big ways. But this isn't just normal consolidation where we have REITs and big operators taking over. This is consolidation that affects all of us, and in ways you probably don't know or haven't thought about. That's what we're covering today. And the changes that are being made will affect everyone, and it shows signals of where the industry is going, and you need to understand why it is important. This is more signals that the self-storage game isn't just changing, but it already changed. I'm excited to dive into this with you guys. A lot of the news you may have heard about, and maybe some of it you just brushed off and didn't really think about it. There's some underlying things here that really put it all together and are not apparent at all. First, we have the obvious, which we're going to touch on, and then we're going to break down into the not so obvious, what it means and what it shows us about the self-storage industry as a whole and what it means to individual operators and the marketplace. First, we had consolidation that took place on both sides of the self-storage industry, and it happened within 8 days of each other. We had operator consolidation, which was PSA and NSA. But then we had data, and we had our vendors and infrastructure consolidation, Green Street and StoreTrack. Now, there is more to StoreTrack than just that name. It also has some subsidiaries underneath it. Let's hit on the first one, and then we're going to move into the intelligence part of the industry, the data, our vendors that we use, and what it means. So, PSA NSA closed this week. $10.5 billion enterprise value, over 1,000 properties, 69 million square feet, 550,000 units, 37 states. Now, the target here is about 110 to 130 million in annual synergies that it will generate. Shareholders approved this on July 14th, and it closed on July 22nd. Now, outside that, we have other operator consolidation. We have SmartStop and SST are merging in a $1.2 billion all-stock deal. Next, StorageStar went from 59 facilities in 10 states to 119 facilities in 21 states in a single quarter. StorageStar is awesome. I sold some facilities to them. They are an amazing group, and they're really good at what they do. They're being aggressive, and they're moving fast. And honestly, no better people to have it happen to than StorageStar. We really do like them. They're a good operator and just good people to deal with. These, though, all are signals, once again, of this consolidation. Even my firm, we have been consolidating a lot. We've already done $60 million in acquisitions this year, and we are on set for over $200 million more by the end of the year. So this is something that we're not just seeing and understanding, we're participating in, as well as a lot of groups. Now, to put this really in perspective, when Storable did a survey of 500 operators, 31% named competition from the new market entries as their top concern ahead of the REITs. So we're talking about new supply. We have new supply coming in, and that is a top concern. But when we look at how the self-storage industry has changed, it's actually really interesting to see the makeup of storage facilities and what that looks like. Today, the top 100 operators control 52% of the U.S. rentable space. The top 5 within the top 100 alone control 35%. That is a massive change in the last 10 years, and that has really accelerated in the last 5. Now, this is important and shows a lot of what's going on the asset, the actual storage side, of course, as we know, but also the underlying pin of what is happening with our third-party vendors, the data, the intelligence part of the industry. These two things combined are very telling. The reason being is the second reason is actually one of the major drivers of the first consolidation part, the actual consolidation of assets. And that is the consolidation of intelligence in our industry. So first of all, let's break this down. What is Green Street? So Green Street is research, news, data, analytics, and advisory across commercial real estate asset classes. It serves 4,000 plus companies across North America, Europe, Australia, and Asia, including investment bankers, lenders, brokers, advisors, as well as operators. Now, Green Street has been on a roll within the real estate sector, and it has been a serial data consolidator. In 2020, they acquired Real Estate Alert, Commercial Mortgage Alert, Hedge Fund Alert, and Asset-Backed Alert, all from Harrison Scott Publications. In 2024, they acquired IJ Global. Now they acquired also in 2024 College House, student house and property level data. 2025, they added data centers and lodging to the U.S. sector coverage. And in 2026, they launched their Canadian CPPI. This was 6 days roughly before the StoreTrack deal. Now, what is StoreTrack? Okay, so that's Green Street, right? Now, what is StoreTrack? So StoreTrack, that is a rate and pricing platform that is built for operators. That's built for me, you, other people looking to get into the industry, for developers or someone looking to buy a facility, to analyze and look at rates and pricing in the market. So really, when we dive into this, this is a market analysis tool for investors, for operators. And it has integrations through their API. That means that they can push and receive data to leading property management companies and different systems. Now, the big thing with StoreTrack is that, for over the last decade, it has been really pushed as an accurate, affordable option. So small operators really focus, and I promise, not so much an institutional one. But StoreTrack itself is not alone in this overall acquisition. They also have listselfstorage.com and RV Park IQ. Those are both under the StoreTrack brand and companies which Green Street acquired. Now, Green Street acquired them, adding to already their self-storage data that they have. Now, List Self-Storage, that is for buying and selling storage facilities. I know a lot of these you're probably already familiar with. This one's interesting because it's broker-gated by design. It has to be represented by a licensed real estate professional. Now, RV Park IQ. Okay, this is listings and market data on over 11,000 properties. It now tracks over 13,000 outdoor hospitality facilities, and it also includes 400 glamping sites. I actually didn't know that one. So now when we look at RV Park IQ, it also shows how in our own industry we have these sub categories that follow along it that really do need their own data tracking system. So this looks and it weighs everything from market demand. It gives them scores, and it's really focused on the RV park part. Now, both of those came, though, with our overall store track acquisition by Green Street. These are data companies and information companies. That's what Green Street is. It's consolidating. Okay, so how do these two things connect? Really, what does it mean? This is not the first round of data consolidation that we've seen. We saw a lot of it 5 years ago, especially in private equity as they started to buy up and package up a lot of these companies that may perform a function, whether that is to find a storage unit or overall data. But they were going not just for the functionality, they were going for the data that comes with it. And they're putting them all together. It'll be interesting, I believe, to see with StoreTrack if this means that they are moving much more to institutional. It'll be interesting to see if their pricing changes because Green Street has such a focus on that. But this gives Green Street mass amounts of data and power. Now, this is, once again, I believe, the second wave of this data consolidation that we've seen.
Have you been wanting to get into self-storage but struggling on the next steps to take? So you may not know, but I wrote a book that's hard to even call this a book. I mean, this is a manual. We're talking 400 plus pages, which include all sorts of information about how we have been in the self-storage industry. That's everything from how we got our first deals, to scaling, to buying deals in today's market, what's changed and what remains the same. This is an up-to-date book that shows you how the market has changed and how you can win today. This isn't simple, this is how you buy a deal. No, this goes into everything, including how you scale and create a self-storage business. You can get a physical copy, an ebook, or the audiobook, plus free access to bonus content at the end of each chapter. You can get it today. It's available on Amazon and other platforms in which you can follow the link.
How this ties into our overall consolidation. As I mentioned before, we have the PSA, NSA consolidation that's happened, but really the part that stands out, we talked about Smart Stop, Storage Start, just to name a few, but the really big part here that stands out is the amount of facilities that are owned by the top 100, but really the top 5, which is 35% of the 52% of U.S. rentable storage that the top 100 operators own. What we're seeing is a consolidation not solely at the top of the REITs, but the big change that we've seen in the last 10 years is these 100 operators and their size making a big difference in the way it hasn't happened before. That is because data information has become the name of the game. Now, this is across industries, right? But we're really seeing this in storage. So we're seeing consolidation from private equity as well as Green Street, other companies to consolidate all of this data. Now, that is then used by large operators to give them an edge in the marketplace. It gives them an edge on pricing in the market, as in buying, selling assets, market data, which markets they should be in, and how to price that accordingly, what the top, the bottom may be, risk, but then also the individual pricing of units. Now, this is something that I'm fully aware of because I'm participating in. We have worked hard over the last 10 years to build out our tech infrastructure. I've invested millions into it. And data. We built out an entire proprietary software system that takes in data to simply look at pricing. Now, at first glance to an individual operator, a lot of this stuff may seem scary. And it may look like we are losing our competitive advantage in the marketplace. But there is another side, because yes, while that consolidation both on the facility level and on the intelligence level in our industry, it does create a massive advantage. And it is really big in operations. But with a lot of this technology and data, we've also had sub-companies spur out. Data is becoming transferred more readily available. It's becoming acquired and packaged up and sold, and it's being brought down to independent users. The person that owns 1, 15, 20 facilities, and they're getting access to tools and data that they've never been able to have before. What this shows, though, is that the game has changed, and it's continuing to change. Very much like when online marketing came out, a huge section of the industry thought websites, online marketing wasn't that important. The REITs jumped onto that in a really big way. They went through massive consolidation as they pushed their online SEO marketing as well as their pay-per-click, their paid advertising to fill up units, get higher pricing, and that strategy worked amazingly and blew up. Why a huge portion of the industry was just waiting behind, only to figure it out too late. By the time they figured it out, your average click had jumped 10x up in cost. So they lead the way with a lot of these things. The business model had changed in how our customers were finding us, how they were choosing which facility, how they were renting. A lot of operators did not adopt that until they were forced to. And by the time they were, if they sold their facility, they sold it at a way less price than they should have actually had it. Their rates were way behind, or they were now playing and operating in a higher cost environment where a lot of that data had been taken up and were used and been really, really mastered by these larger companies. They were late to the game, and it showed. What we're seeing today is now not on technology, on the front-facing, the internet, the website, pay-per-click. We're seeing the change in the business models, just like we saw then, to behind that. Data, analytics, decision-making. And yes, AI does come into this. The reason AI comes into this is if you have data, you have a lot of this data, what do you do with it? AI now makes it possible for individuals, independent operators, to actually take in data, and a lot of it, and make decisions that they just never could have before. So the barriers have now come down, and a lot of it down due to AI, so that individuals, small investors, small portfolios, which I consider myself in too, even though we are an independent operator, and by some may think much larger, we're not the multi-billion-dollar boys. We're not in that game yet, right? We've had to take those tools and bring them down. We've had to see how can we use it and use AI to take that data when we don't have teams of developers and we don't have just teams of analysts. How can we use that? AI has transformed that, and it can for you too. Now, the companies in the space that are consolidating, there are ones that still aren't, like Tract IQ, which we've had on, and I'm an investor in, and I'm a big believer in. One of the reasons is, just like we started the self-storage co-op, which was store local, us and other operators, a part of that, believed in the mission. We wanted the individual investors to have a competitive advantage, that they stay around. Now, that's not selfless, because if the individual investor, the individual operator, the small operators, that 4 or 5, go away, I don't have a market. I don't grow. My company dies. We will end up like the hotel industry, where you have 4 or 5 brands that control 90% of the industry. That's what Store Local and these others were built to fight against. It was to go against that, to give brand, marketing, and power, just like the big boys have, into the hands so we can have a healthy, vibrant industry from the top down. It's not about not having big boys. It's about having small, medium size, and big players in the industry. That's important for the survival of the industry. We believe outside an industry where very few control all of it. But that consolidation is happening fast. And what we're seeing is this next wave of innovation, the intelligence data game, is being used by a few, and they are gobbling everything up. This was one of the main reasons why we built our Now Metrics system. Now Metrics system was a simple idea to just be able to take in data and then use it. So it helps us with everything from measuring financial goals to marketing to actual revenue management and pricing that can be used instead of just depending on competitor rates. We needed a spot where we could pull in not just our data, also market data and others, and give us a way that we could maximize rental rate per square foot. We could understand our tenants, where we should market, everything else. This was the same idea that we built Hummingbird and that software system. It was an open data system where you can go in, get your own data, you can pull it, you can use it so that the small mid guys can survive. This is important today and becoming ever more important as we look at this consolidation. But the vast majority of people just don't know what to do and they don't know where to start. And that's totally understandable. A lot of that stuff can seem confusing. But the advances that we've seen in the last 3 years are the infrastructure to actually do that for you. A simple software system to be able to take your data and other data in and show you the pricing, show you what's going on. That's why I've spent 3 years investing in and building that Now Metrics system. If you want to know more about that, I'm not going to dive into it here. You can click on the link in the video if you want. It's right in the description. There's a little thing in there. You can jump in, sign up. You can learn more about it there. The point is what you're doing with the data and how you use it. That is what the tech infrastructure that we've been partnering with and building, like with Tract IQ, has been all about. That's why we're believers in those organizations. It's because we need that power, you need that power, and there is a volume problem. Data is a volume game. The more it consolidates, just like assets, you get that scale and ability. And today what we're seeing in the industry is not just consolidation of units, it's consolidation of intelligence and data, which creates a massive competitive advantage. The important thing to know is there are more tools coming out, but you do have to change the way you are thinking. Just like we had to change from marketing the old way to focusing on SEO, pay-per-click, we have to change the way we think about data and intelligence, and that's actually important. The perfect example of this is pricing. What happened after COVID when the REITs dropped their prices like crazy on new facilities to try to fill up? At those original price drops, how do you even make money when you're lowering prices that much? Well, they learned really quickly that a street rate and an in-place rate are very different. You can price a street rate and then reprice that in-place rate so that discount you're not losing money on. How do they do that? They do that from the intelligence data game and then their marketing side. That is one of our major focuses at Cedar Creek and with self-storage income. It is not just the information that we want to give out to everybody, it's also the tools to do so. Why? Because we are better together. Store Local is meant to have a brand that an independent and others can use and operate, but gives you the power of a brand of a REIT on SEO and everything else. That's what all of that does. That was the whole design of the co-op, and we believe in it firmly. So today, that is what I want you to take away. Self-storage is changing and it is consolidating, and it's not just in assets, but it is actually in the business model. Just like that major shift that we saw the first time this happened that changed the game and it never went back, it only got more, where online we used to acquire a fraction, if any, of our tenants, prior to 2005 or 6. Today, that's 80+% of all our tenants are acquired that way. We will look back in the next 5 years, and it will be the same thing when we look about data intelligence when it comes to price setting, market analysis, rates, and more. And those that aren't playing in that world, it will become very obvious, and they will have a uncompetitive advantage in the marketplace. That's what we don't want to see. So share with others in the comments what you're doing, what tools you're using. But remember, data is king moving forward. You need access to it. You need to know what others are doing. And we're going to try to keep you guys informed and up to date. So if you're looking at getting in the storage game, you can get in, compete, and be successful like we always have. And if you're in it, you can be more successful, more profitable, and you can acquire and grow more.